Investing in Bitcoin for beginners. Before starting this video, please like this video and subscribe to our channel for future updates. What is Bitcoin? Bitcoin was created by a programmer or group of programmers using the name Satoshi Nakamoto. But the real creators of Bitcoin is still unknown to the public. Bitcoin is one of the most widely used types of cryptocurrency. Virtual coins or tokens are used in a cryptocurrency system instead of physical cash. Coins have no intrinsic value, and they aren't backed up by gold or silver. Bitcoin was created to solve a couple of big cryptocurrency flaws. First, it was designed to prevent crypto coins from being fraudulently duplicated. Think about how easy it is to make copies of your computer's data, documents, photos, files, etc. Cryptocurrency wouldn't be possible if anybody could duplicate a coin and create an unlimited amount of currency for oneself. You can't just make copies of a $20 bill, right? Likewise, there's a need to prevent people from reproducing crypto coins. How does Bitcoin work? Bitcoin uses a digital technology called blockchain, an advanced coding mechanism that disperses a single code over thousands of different computers. Blockchain also employs a public ledger, which uses thousands of computers, referred to as nodes, to keep track of coins and their owners. If a coin's data is changed, the nodes will cross-reference their records to verify whether the change is accurate and that the coin's owner initiated it. Anytime money goes from one Bitcoin wallet to another, it's logged. Bitcoin wallets store a private key or seed, which is encrypted. This data is used to sign transactions, proving their origin mathematically. The signature also prevents anyone from changing the transaction once it is given. All transactions are broadcast to the network, and within 10 to 20 minutes, mining begins to confirm them. According to Bitcoin.org, mining assures a chronological chain and network neutrality and allows several computers to agree on the system state. To be confirmed, transactions must be encapsulated in a cryptographic block. Changing previous blocks invalidates all succeeding blocks, hence earlier blocks cannot be changed. Mining also creates a competitive lottery, prohibiting anybody from adding new blocks to the network sequentially. As a result, no group or individual controls the blockchain. What is Bitcoin used for? Once you purchase coins, you can use them in online transactions, wherever they're accepted. Remember, when you make a transaction with a coin, there's no actual money being pulled from your bank account. Money only leaves your bank account when you purchase the coin itself, not when you make purchases with a coin. Like cash currency, the value of a coin may fluctuate. That's why some investors are getting excited about Bitcoin and other types of cryptocurrency. For now, investors should pay special consideration to the rate by which Bitcoin and other relevant cryptocurrencies are being adopted. Not unlike traditional equities, Bitcoin increases in value when more people are interested, and more people are interested in buying Bitcoin today than ever before. Whether it is a pure conviction or an inherent fear of missing out on what many predict to be the greatest transfer of wealth in American history, trading volume continues to increase exponentially. For the better part of a year, in fact, Bitcoin trading volume has steadily increased. As a result, Bitcoin is regularly testing new highs. How to invest in Bitcoin for beginners. Bitcoin investing is much more accessible than it used to be. You can buy and sell crypto on exchanges using fiat currency, such as USD, or by swapping one crypto for another. Many stockbrokers and robo-advising platforms now offer Bitcoin investing too. If you're interested in investing in Bitcoin for beginners, here's where to start. How to invest in Bitcoin in 5 steps. Are you ready to dive into cryptocurrency? You're in luck, as buying Bitcoin is simpler than you might think. Here's how to invest in Bitcoin in 5 easy steps. 1. Join a Bitcoin exchange. First, you'll need to determine where you want to make a Bitcoin purchase. Most Bitcoin investors use cryptocurrency exchanges. There's no official Bitcoin company because it's an open source technology, but there are several different exchanges that facilitate Bitcoin transactions. These exchanges are the middlemen of cryptocurrency investing, like a stock brokerage. If you decide to purchase from an exchange, you'll have to decide which exchange you want to buy from. Here are a few of the most popular options. Coinbase, a very popular crypto exchange that ensures losses in the event of a security breach or fraudulent transfers. Binance, founded in 2017, Binance is a crypto exchange with a strong focus on altcoins. Kraken, this San Francisco-based exchange allows you to invest in Bitcoin using various currencies from around the world. Gemini, launched in 2015 by Cameron and Tyler Winklevoss, Gemini offers services for casual and veteran Bitcoin investors with different user interfaces and fee structures for both. Bitfinex, the longest-running cryptocurrency exchange that's optimized for advanced traders and lenders. Unfortunately, Bitfinex doesn't currently accept U.S. customers. As you might have guessed, choosing a Bitcoin exchange is becoming more difficult for investors as more options begin to popularize. Find everything you need to know about Binance versus Coinbase and start investing today. 2. Get a Bitcoin wallet. When you purchase a coin, it's stored in a wallet, which is where all your cryptocurrency is stored. There are two types of wallets you can get: a hot wallet or a cold wallet. A hot wallet is a wallet that's operated by either your cryptocurrency exchange or a provider. Some exchanges will automatically provide you with a hot wallet when you open your account. In any case, hot wallets are convenient because you'll be able to access your coins through the internet or a software program. Some notable hot wallets are Electrum, software that enables you to store your coins on your computer; Mycelium, a mobile-only app for Android and iPhone users. However, hot wallets are not the most secure form of coin storage. If the hot wallet provider is hacked, then your coin information may be at risk. A cold wallet is the safest storage method for your coins. A cold wallet is an actual piece of hardware that stores your coins, usually a portable device that's similar to a flash drive. Most cold wallets cost between $60 to $100. Some popular cold wallets are Trezor, Ledger Nano. If you're only going to purchase small amounts of coins, then you might be fine using a hot wallet with an insured crypto exchange. But if you're going to be trading large amounts of coin, then a cold wallet would be well worth your investment. Need help deciding which wallet is right for you? Take a look at our picks of the best Bitcoin wallets. 3. Connect your wallet to a bank account. When you've obtained your wallet, you'll need to link it to your bank account. This enables you to purchase coins and sell coins. Alternatively, your bank account may be linked to your cryptocurrency exchange account. 4. Place your Bitcoin order. Now you're ready to purchase Bitcoin. Your cryptocurrency exchange will have everything you need to buy. The big question is, how much Bitcoin should you purchase? Some coins cost thousands of dollars, but exchanges often allow you to buy fractions of a single coin. Your initial investment could be as low as $25. Investing in Bitcoin is very risky, and it's important that you carefully determine your risk tolerance and review your investment strategy before you purchase any Bitcoin. We'll go over this in the next section. 5. Manage your Bitcoin investments. After you've purchased Bitcoin, you can use your coins to make online transactions. Hold your coins for a long period in the hopes it'll appreciate in value. Perform day trading with your coins, that is, buying and selling coins with other Bitcoin owners, which can be facilitated on the cryptocurrency exchange. Your cryptocurrency exchange will provide you with everything you need to buy and sell coins. Is Bitcoin a good investment? Here's one of the most commonly asked questions about Bitcoin. Is Bitcoin a good investment? Well, the real answer is no investment is inherently good or bad. It depends entirely on your risk tolerance, investment strategy, and your financial goals. Before you consider Bitcoin as an investment, you should carefully consider your own goals and determine what you want to accomplish in your investment activities. Do you want to develop a passive income? Become a full-time investor? Save for retirement? Answering these questions will help you figure out whether Bitcoin is the right investment option for you. Bitcoin. Many experts believe that Bitcoin is a bubble, meaning it is overvalued and could crash at any moment. Bitcoin's value is volatile. It is equally prone to massive spikes and drops in price. Bitcoin is entirely digital, meaning it is more vulnerable to security breaches than a tangible asset. What do you think of our video? Let me know in the comment section below. If you enjoyed this video, make sure to hit that like button. Also, subscribe to our channel before you go.